So now we have a panel about about investments. Investments in a general meaning, in a variety of meanings. Actually, it will be led by Roman Sulzhik, and he's actually a partner at Distributed Lab and with great experience of invest banking. Stas Oskin from Wings came from Tel Aviv. Marat Kichikov, Bitfury. Mike Sapphire, Brian Kelly Capital Management, and Alex Bulkin, Coin Fund. Yeah. Welcome.
I think we're going to have an exciting panel today. And basically, I think we'll open it up to the audience, pretty quickly. But as somebody who's been more in the traditional banking industry for like 15 years, and I see how the current, this crypto securities industry evolving, I want to open it up for just everybody, because maybe not all people in the audience know who you are. So maybe just a very short intro, like who you are and how you are basically involved in this, crypto sort of investment or securitization of existing, securities. So just briefly, everybody.
Sure. My name is Marat Kichikov. I'm a managing partner of Bitfury Capital. It's a venture arm of Bitfury Group. We're doing not a lot, but we're doing quite significant amount of investments in the industry. We're doing it for the last probably 3-4 years, and that's it.
Hello, I'm Michael Sofair. I'm Chief Technical Officer of BKCM, which is a hedge fund out of New York. We mostly do tokens. We do some more smaller individual project-style investments and a few very far future technology-type investments.
My name is Stas Oskin. I'm one of the co-founders of the Wings platform, which basically unifies retail investors for evaluation and investment in projects. I'm also part of the fund, which does mainly Asia-based investments. We have a lot of partners in Asia, and also one of the founders of the new privacy-based protocols. We mostly invest in protocols, new blockchains, less in dApps, I must admit, despite us being a dApp, which is a bit funny. We work a lot with Asian projects. Mostly we have partners with, for example, FBG, which is a very known fund in China. Also with Japanese syndicates, and also with Israeli groups like Alignment and Hexa, which just recently brought over $700 million to various projects in Israel.
Hi everyone, Alex Bulkin, Coin Fund New York. We started investing in tokens and digital assets in late 2015, and didn't stop, but really expanded our investment profile to various other types of assets and systems. And we pride ourselves at being able to really dive into technology and really help projects create strong products as well as strong blockchain systems.
Well, I'm trying to get the second microphone, but I guess to me, still I understood what some of you are investing in, but not everybody. And I guess for me the interesting question is right now, what would you rather focus on? Where do you see? Is it teams? Is it sort of technologies? Is it actually taking existing products and blockchainizing them? Where do you see what are the next trends for the next year or two? What do you see are the key things what you're looking for in each of your respective fields? Whoever is ready. Yeah.
I think it's a big question. One of the definitively interesting areas that you look at today that I think is going to be very, very promising is, for example, things like mesh networks for internet bandwidth, and also things like energy microgrids, which are, for example, real-time IoT automated payments for electricity. And what connects these two types of projects is that in order to expand networks for these projects, you really need tokens and crypto economics to get people to connect to the infrastructure and build infrastructure, because these projects can hardly take off because they're network effect projects. And so for them to take off and for them to boost engagement from people, they have to create token economics which essentially transfer value from the future into the present and reward early users with future profits. So I would, there are other types of projects, but today these are, to me, one of the most interesting opportunities.
Okay, we basically look at two types of main projects. Ones are startup teams, mostly from Asia. Again, it's not nothing, we're not racial, of course, not any case. We focus in this because the market is huge there, and they're very open for any kind of new experiments with money. So usually anything, just because the scale can be applied there very efficiently. We're most interested in economy of sharing economies, let's call it, in project which are related to IoT as well, in project that related to financial, like payment networks, that's like the free, and it's for startups. For established companies, we usually look at the companies which already have some product, and that really makes sense for blockchain. We're not just jumping on every opportunity. We prefer to have a very experienced team, which has built several companies in the past, including exits, if possible. And we help them both with funding and with strategic guiding in order to gain the best results, both from their token sales and from the post-token sales secondary markets, in order to get the best distribution of their tokens.
So a lot of what I do at BKCM is I look for projects that I think can sort of have consumers, and by consumers I mean people that interact with the network, put money in, and don't expect to ever get money back out. And that, as far as I can tell, hasn't happened yet, ever, in the space. So I'm sort of keeping my eyes up and looking for projects like that. I think that will be an inflection point for investment. I think once we start seeing projects like that, it will change the way projects that don't work like that are valued. In the meantime, I think a lot about, mostly about sort of like the community and what the community wants to see, because the space right now is very driven by a sort of like hopeful ethic of the second wave of investors. That's really what makes things from an investment point of view work, is if the community at large buys the story, wants to see the whatever change the project is pitching to create in the world. If sort of the broad community that already holds crypto wants that change, then that will drive investment in that project. It's I think it's a very sort of optimistic kind of environment right now.
But no, for a mastodon like myself, can you give an example of what a project may look like, where people want to put money and don't want to take the money back?
Yeah, I mean, what's something you pay money for on the internet, right? Like, maybe like if you paid your rent, if there was a token that like paid your rent and you wound up like paying it, and then you live there, and then you've spent your money, but you lived somewhere. Like some kind of, something where you actually, a final economic transaction where you receive a value and consume it. And you're not trying to, you're not trying to get your money back out later. I want to see something where at least part of the community is a consumer, like a true consumer. And they walk away at the end of the day and they say, I got what I paid for. I'm done, right? I went surfing, I'm happy. And so that's something that I sort of am always looking for, is like, is this project something that could actually, can a consumer really get involved, have an experience, or receive, a physical good and walk away with less money than before?
You get a crypto kitty, and
I don't believe that anybody is using crypto kitties except to sell the kitties again later.
Yeah, actually, everything what was discussed by my colleagues, it is right. It is very exciting. Everyone is looking in the IoT. Everyone is looking in different ways how application will be built on top of the different protocols. But exactly at today's moment, we believe that infrastructure should be built first, and we believe that the most exciting areas for us, it's protocol layers. When I'm saying the protocol layers, we think about, basically what Pavel was mentioned before. There is different scenarios. It could be open, open ledgers projects, public ledgers, semi-private, and very difficult to predict who will be the best for at the end for application level. It's very difficult to predict what developers will choose at the end, where would be this scale effect. So that's why investors is differentiating the risks at the moment, and betting on the different protocols, because honestly there is not enough expertise to be sure that this particular technology will be the main internet in the future, or that particular, or they will be interoperable or not. So that's why but everyone is sure that future will come and it will exist, right? So that's why spreading of the risks is matter, and our focus is on the technology layer right now.
Yeah. As a partner in Distributed Lab, I'll allow also to, weigh in myself, because I personally believe that, a lot of value is going to come from building a blockchain infrastructure that is easily integratable into like Oracle, SAP, into existing businesses, like something that doesn't just say you put all your business in blockchain. It's a small part of your business suite of software where you actually add blockchain. And this is what with Token D, this is what we're trying to do. But to you guys, the financial services industry, not just basically acting as a private equity type funds where you guys invest to choose the products, do you feel that you're disrupting the traditional VCs, the traditional guys, or in your case with a hedge fund, you're just becoming a part of it? What do you guys feel a little bit of this conflict between new and old, or you feel that you're amalgamating nicely and just becoming a part of the sort of financial system as it is? Whoever's ready.
You got the mic. Okay. I don't feel particularly different from a regular hedge fund. I think, we do what we do. We're a very traditional institution. We take money in from investors, we invest it, and we try to provide them a return. As an organization, we are not trying to sort of create a different kind of entity that sort of displaces what one would have thought a hedge fund would be. That's not really what we do. We just want to make money for our investors.
I'll take the opposite view on that, because
Nice.
to me, I see an emergence of a completely new type of an investor. Very early, it's not really obvious yet, but it's an investor that adds value to projects, and also an investor user, right? So Pavel was talking about the utility tokens that combine the features of a use coupon as well as an investment instrument. And on the other side of that, an investor that holds tokens is no longer going to be able to just hold tokens. It will be increasingly required in order to exercise the financial upside of these tokens, to create a model in which you can provide the services that this token requires you to provide. Let me give you an example. If you have invested in Cosmos or in Ethereum, if you don't run a validator on those proof-of-stake networks, you're going to be losing money by passively holding tokens. So you're going to either have to create a partnership with a partner that can run the validator nodes, or you're going to have to figure out how to run them yourself. And this will start happening across the board, because I think the biggest objection to the entirety of the VC industry so far has been the misalignment of the venture capital with the product that it's investing in. Because there has been several cases where by virtue of basically driving profits ahead of user experience, the VCs have actually hurt the product that they invest in. And so in blockchain, the culture will increasingly demand that the investors align themselves with the users and the creators of the project. And that's the disruption that we see in investing.
Well, I would add to that. I think part of the way investors will participate is actually with online, maybe like voting or whatever. Like every time the project wants to go somewhere, it can sort of consult people with an online board of directors vote and things like that.
I don't really object to any of that specifically. I just don't think it's new. I think that's what strategic investors have always been.
It's going to become bigger.
I mean.
Yeah, so I think the traditional VC funds are concerned, to say the least. We've been in touch with a lot of VC funds in Israel and the United States, and I know like they passed this whole, like the Mahatma Gandhi said, like if they will ridicule you, then they will fight you, then they will join you. And we've seen a lot of them like starting to treat all the tokens and all the ICOs and private sales as kind of joke. But the more they've seen that those sales are actually taking their market share, they're taking good companies out of their let's say reach and bring to the market, we've seen them a lot of them becoming to see how they can adapt to this new model of operation. And it's actually, if you think about it, it's like one of the first times in history when the investments is starting getting out of their playing field. If in past the VC was the king, okay, he was a bit diluted by the angel groups, but still venture capital was the place where you as entrepreneur went to make money. And I know as I raised money for 4 companies before working in crypto, and this was actually the guy which you have to ask and basically persuade them to give you some money. Now suddenly they see that some guy from China, some guy from Japan, some guy from Russia, Ukraine, whatever, can just give this first seed, this first round to the company, and they're not actually needed. So their value as a VC, I'm not speaking about all VC, there's very smart VCs which are very good to have in your team, but like this secondary VCs, their value actually begin to drop very quickly because they both take a lot of equity, they take control of the companies, and in the nutshell, they're not giving a lot other than money. And we believe that in the end, they will either adapt or disappear. Either will adapt to this new paradigm and they will become smart money, will be really helping companies and be justifying their equity they're getting, or they will be removed by all the innovative funding models which the blockchain and not only blockchain is bringing on. So luckily we've been working with some smart VCs like Man Group, for example. It's a very known European VC, which launches a new crypto fund with some others. And we believe that the good one will remain, and this basically will be fusion between the old, as we call old money economy and the new one.
My opinion, I think, the expertise, the risk management, amount of knowledge is still matter, and stupidity will pay the price in any case here. So that's why, we're observing this combination of 2 models or several models, like VCs, like crowdfunding, but eventually it will stabilize and still will be concentrated in future.
Okay, guys, so in the audience, there's quite a lot of money sitting around the table, I just want to open it up, like whoever has questions about, projects. Okay, I think this is going to be more productive. Yes,
All right, thank you, Roman. Thank you, guys. I was wondering actually about the methodology using to value these investments, right? So we have seen the late 90s when the dot-com bubble exploded. A lot of people were leaving the market. They had no clue what they were doing. Some people were smart and actually using new technology and at them decided Google has value, okay? That's because they didn't value cash flows. They used other curves to do this. We have the same challenge actually with all these investments in blockchain technology, tokens and so on. So could you talk to us about what specific valuation technology you're using to decide whether or not you're investing in these ventures? Thank you.
I think trying to have a quantitative valuation technology for this space beyond sort of like technical trading in an hour-by-hour basis is just sort of trying to put a mask over a guess. So I don't believe in it. I don't think it's a good idea. I think it's easy to look back now and say, well, people had whatever reason they chose Google, but there's all sorts of people who had just as good reasons to choose something that didn't work, right? This is the sort of the benefit of hindsight, I think. it's great if you had Google in your portfolio then, but I think people give themselves a little too much credit about having picked something that turned out to be a winner. Like I said, in general, I'm looking for things. I do think that there is some kind of winnowing event coming, and I'm looking for things that I think will provide real value to people, to people who don't care, right, about crypto. I think about things that what will make someone who doesn't care about crypto use crypto, and that's sort of my heuristic on like a general level. But I think trying to get quantitative heuristics around these kinds of far future technologies is just a way to confuse yourself.
I really agree with Mike. We see only needs quantitative technology to explain why they did something, not to decide to do. Because I think there's too much uncertainty in all of these efforts, and so you have to ask yourself kind of binary questions like, does it seem like the team wants the investors, wants to do well by their investors? Does it seem like the team wants...
What's wrong with them?
Does it seem like the team wants to build the product they're trying to build? Does the product make sense? Is the product feasible? and then you kind of you look at the valuation and you look at the business model, but you really have to clearly acknowledge to yourself that what is the business model today isn't going to be the business model tomorrow. Look at Netflix. Look at how Netflix promised, subscriptions to DVDs delivered in the mail. I don't know if people here know this, how Netflix worked in early 2000s, right? And then everybody's like, yeah, but they're going to get disrupted by Hollywood. And guess what? They are now disrupting Hollywood. And that's because they're a good team. And they had no idea that was going to be their business model back when they just started. So you really have to understand that. And you're going to miss unicorns. And you're going to miss really great opportunities if you focus too much on the quantitative methodologies.
Yeah, well, we look in first and most of the team. We know that the product can pivot many times until it gets to success, but in the end, it's people who matter. We believe that basically any project which starts is going to change anyhow. I mean, they're going to throw out of the window everything they're thinking about, and they're going to rethink it several times until it gets to success. So for us, very important is to see their previous performance. It's okay if the team has failed. We actually like when the team has failed in the past. It shows that they still continue working. We like to see what their mitigation plans, how they understand the whole market. We, of course, need to make sure that their solution they're working on is really adjustable for blockchain. There's a lot of projects out there which I would even say like 80% out of them, if not 90. We just put the blockchain moniker on top of their business and say, listen, now we have a new blockchain project. Let's raise money, ICO, private sale, whatever. And once this project gets out to secondary markets, it crashes immediately because obviously people are not stupid. They see they selling some fiction. So team is the most important one. Technology is this next one. We want to see that the team really understood its stuff, knows how to do technology. In this market, there is now a lot of people with ideas and too little people who really can do tech. I mean, if you will see, like I would say, over again 80, 90 projects raising money now, taking outsourced companies to build for them like something which they promise to their investors, which really not the way it should be. So we need to see that the team really has the chops to do it what they promised to do. And it's all the idea. It's important, but again, not a lot, because we understand it might change several times or even be removed and thrown again. You said Netflix, look at Airbnb. Company we started with totally different product and pivoted into rent and sharing economy. Look what unicorn they are. So this is like our ladder: team, technology, idea.
Yep, basically agree with everything that was said, but I believe we're using kind of like two approaches. One is a speculative approach, and the second is kind of like traditional investment approach. So if it's traditional investments, it's definitely a team, it's technology, it's less hype, more work, ideas is matter. If it's but look at the reality. Sometimes in today's market, you also have to take into consideration speculative approach because it's highly volatile, you know, and unfortunately, it's sometimes reflect for this speculative competition is reflect for scalability of some of the projects. And of course, you know, don't look on the not related shit coins or shit projects.
So I have this question regarding the value that you're saying smart money or VCs are bringing, and that's our two questions that I'm going to split. First, what do you prefer more, going into the seeing the project and going into the equity and being sort of the part of the smart money, versus seeing interesting, I don't know, open source, public, blockchain or protocol, and going and investing into the coin, but have no influence or relationship with the team. And a second is, if it's that investing in coin, how do you help? Like, what can you bring if you're just one of those, even you're smart and experienced? Thanks.
Yeah, so I'll start with this because we kind of have some of this under our belt. We've been working with like smart money with some projects you probably know here, like Black Moon in the Russian side, INS, AdHive recently. In the western side, we've been working with projects like ADEX, Bancor, which was a very known project in Israel. We like to support the projects both financially and with our strategic ways, which basically divided to 5 parts. We help with improving or correcting the tokenomics, which a lot of projects unfortunately don't get nailed on the first time, so we help with this. We help bringing very good marketing agencies. There's a lot of, let's call it low quality, I wouldn't say even junk agencies out there, so people often end up burning money on some stupid stuff which doesn't really create any hype. We help with bringing and auditing the smart contracts. Today is unbelievably expensive to make a good smart contracts audit, and we really prefer to have like the product already, some MVP out before the sale starts. Then post-sale, we help with both getting listed on exchanges. We have very good connections with all top 5 exchanges. And we help with market makers. And I'm thinking about good market makers, not the usual pump and dump ones from shady ones, but good ones which help maintaining something we call token health. And this like the value we believe which the companies look the most, because they both want somebody to give them like a seed or like the first money to start running, and guide them during the process to get the maximum result. We truly believe the good bond companies do not look just to raise money and then have the token crashing after it gets to secondary markets, and then creates a lot of negative sentiment from the public. And we do believe the companies we work with trying to have a very good performance on those markets and make money for all involved.
Just quickly, I think your question about investing versus equity, investing into equity versus investing in open source projects through a coin. I actually think that open source communities are very often much more open to feedback and input than companies. We love investing in coins of open source projects because usually you're right in the mix of things. It's easier to find out what's going on. It's easier to make suggestions. It's easier to contribute. But in general, the equity versus token question is actually really, really complicated, because very often a company would start and they would need an early stage investment, and they would have no idea whether the value is going to be in equity or the value is going to be in token. And so then starts the project of kind of legal ideation about what your contract actually looks like, to determine what it is that you want to be investing in and in what form.
So how do you impact the coin? Like, how do you bring your value in terms of experience? You just share it as an opinion, and either it's stick that they will pick it up or not?
Well, I mean, with us, more often than not, people come to us for advice. So in general, I think you have to earn that place, but it's not that hard. If you keep contributing honestly without like being disruptive and just being clear and useful, then you will eventually become known for the value you bring.
in the internet space, and in fact in a lot of spaces, but particularly we've seen in the internet, most of the giants started out without very much of an idea as to how they were going to monetize their system. And through use and through getting customers, they figured out what the actual behavior of the customers were, they figured out where the value was, and they figured out a way to capture it. Now, with tokenized projects, there's a weird thing going on where you kind of have to fix the crypto economics before the system's launched, before you have real customers. And it seems to me a huge potential problem where it's very difficult then to adjust or figure out a different monetization scheme. And I'm wondering how you guys think through that.
So I actually think that question's a lot like the equity versus token question. And it also ties into what I was saying about there are no customers yet. So the question of, what are these assets? What are these tokens really? And when this system starts to work, does economic value actually accrue to the people who hold those tokens? Right? And it's not, I think, 100% clear, and it's certainly on a token-by-token basis. Whether, I think it's very possible for a network to work, a token that has been highly valued to exist, and for people to discover at some point that in fact the token doesn't actually capture the value of the network, and that and for the price of the token potentially to crater, even though the project succeeds. So I think that's something we think about that. When we think about very long-term, multi-year investments, we think about that a lot. Is what does economic success look like? What does sort of like a traditional flow of funds look like? It's not a traditional flow of funds, but you have to think about it that way. Like, what does a flow of value look like? Where does value wind up in the hands of whatever thing we're buying? So, does that answer your question?
Yeah, actually, as I understand correctly your question, I think it's a very good question about the today's token economies when the people launched their networks or applications, and they kind of like promising to their investors, clients, certain protocol of behavior, right? And it could be a huge wave of mistakes because of example with Netflix, like some of these entrepreneurs, they lock themselves in a dead valley because pivot wouldn't be impossible. Pivoting wouldn't be totally impossible if the network already exists. It's not gonna, by some reason, it's not gonna work. And what you're gonna do? You already have liabilities to different parties. And what? I'm not sure that fork will be helpful in this situation. And especially, maybe some legal issues also will be significant here.
Thank you, guys. I'm wondering, how do you feel like the conception of fake it till you make it creates some positive feedback loop, and most of the funds getting involved in it, and now we have all that many thousands communities of for projects who do nothing, and how we going to get out from that situation?
I mean, organically.
By them dying out.
I mean, yeah, exactly. Darwinian model of survival. I met somebody recently who said that they used to be a Bitcoin maximalist, and I said, what made you change your mind? And they said, reality. The reality catches up to people. If you're stubborn, it'll crash you, but if you're not, you'll just adjust.
I think once enough people lose enough money, this kind of effect will disappear. For anybody who's inside, I just have one advice: get out in time, and that's what I can say.
Yeah, I'll just have, it's also like, it's so easy to get caught up with this, especially if it's your first time when you're experiencing a bubble. And I remember in 1997, in '97 or '98 when it was just starting internet bubble, and I was like 20, something years old, and it was so exciting. You get these huge jobs. Everybody wants to get you just because you can program some C, and I remember this girl, like she was programming some COBOL on some VAX VMSs and was making like $80,000 or $100,000 a year for like nothing, absolutely. And she said, "Oh, if only I had $100,000, I would like live my life." I was like, "How would you live your life?" She's like, "I'm just gonna invest it and I will live off the money that I make." And I said, "How much money are you planning to make off $100,000?" She said, $100,000 a year. So she was expecting that it would double every year, and she would take the 100,000 and the next year it will double again. And I said, "Don't you think that it's like unrealistic?" She said, "No, but it's been doubling the last couple of years, so it's going to continue forever." And so what I'm saying is like, maybe some of you are experiencing this. You're not the first. It's like every generation has one or two of these.
Yeah, if you seem to be saying this is a bubble, I think you might have said that. You said it. Sure. But when you say there's a lot of projects that are sort of running on fake it till you make it, a huge number of them, and you've said that they're going to fail, you've kind of described a bubble. So I think, our value proposition is that we spend a lot of time looking at what's really real. And I, in particular, spend a lot of time trying to figure out, if there is a winnowing, if there is, a 90% extinction event in this space, what is going to live through it? What do I want to be holding, when only the strongest survive, right? If that does happen, and that's our proposition in general to investors, because the space, so much of the space is correlated only with itself, right? It's this one thing, everything tracks Bitcoin, and it almost doesn't matter what you invest in. So we try to outperform on, at small time scales, at medium time scales, and as a fund, and my job is sort of to try to outperform on a longer time scale for exactly this reason, like what is real, and like, really reading all of the technology and looking at everything and saying, is there something real here, or is this just something that someone has figured out how to market? And 90% of the time, it's just something that someone has figured out how to market, and that's just sort of like, that's the game, though.
But the issue is in the things which is real, actually. They also use, everyone is using such approaches, what you just mentioned. And that's why I believe it's kind of like, like a salt in your dish, right? So you have to have something, but at the same time, if you put too much, you never say, it's never going to work, no one never will eat it. So basically, you buried yourself to everyone. I mean, sometimes it's work out, but not so many times.
So far, all of the has been on how do you choose a project. I want to turn that around and say, how do we choose investors? Because there's a lot of like, I'm going to be the best strategic investor ever. I literally had somebody send me a deck that said Telegram pyramid scheme. That was like, we will run your Telegram pyramid scheme for you. So there's this like, there are the crazies, and then there are the people that say they're going to be great and then they never call you back. So is there a good heuristic? How do you distinguish yourselves as good investors of quality? And can you give us a framework on how I'm trying to find people like you? And more chicks.
I have to think about that. Can I have a minute?
Okay, so I will tell a bit about... So I would say, look at those guys, what they did before they became an investor, before they became a fund. So for example, Wings did, let's call donation drive less than $2 million. Released the working platform in 2017. Is one of the actually working dApps out there, of the many. And had a market cap of over 200 something $million at the January. And with over, I would say, 30,000 users, out of them like 10,000 active. So when we speak with projects, we really showcase them. Listen, guys, we already done this. We brought the users. We did the platform with really small amount of money. We are listed on top exchanges. We are known brand, and we can share some of you of this value. I mean, we can give you money, but more important, we can give you some of this effect as well. And I guess this is what those companies which work with us find in us, because they see we already been in their shoes before. And this is what we really suggest any company work with to look at. Look always not at how much money you can raise, look at what this money can bring you. In addition, look what they've been doing before they became money, before they became a fund.
Yeah, I mean, I think that's basically right. I think it's very much about the people who will wind up, who you're going to wind up hopefully talking to. For us, we talk about, my boss, Brian Kelly, has enormous amounts of experience in finance, a lot of connections in New York. He's got a lot on that front. When I talk to people about myself as an investor, I talk about I've been on, a bunch of company boards. I've been an entrepreneur several times. I've been product manager on a lot of Silicon Valley products, and so I have a sense of what it takes to get something from code that runs and does the thing you want to a product that people use in their regular lives. And I think, I tell people that that's actually a skill set that you should want to have around. So that's sort of my pitch as me. But I do think that when it comes to investors, it's very personal. You talk to them. You ask them for help. I would say ask them for help with what you're having trouble with right now. And the ones who engage with that in a constructive way and provide you with real help, that's a good sign, right? And the ones who, if the ones who sort of don't want to hear about your problems, they want to hear about your Telegram pyramid scheme, those ones, consider potentially avoiding.
Okay, unfortunately we won't help you with the Telegram, but being quite a big company and being in the industry, basically since the beginning, we basically were not investing in anything where we couldn't be helpful, and that's basically our approach.
Time for one small question. Ariel, you wanted to ask something?
Someone else has a question.
Any more questions?
Well, I want to then thank the guys. I mean, I think it was an amazing panel. I want to thank for the questions, especially the last one. Thank you, everybody.